Hello and welcome to FinTech Talk. I'm your host, Charles Orton-Jones. Today we're looking at the technology of lending, LendTech. In the past few years, there's been an explosion in artificial intelligence, machine learning, open banking services, and a plethora of wonderful third-party platforms which really revolutionize the way lending can work. But there is a feeling in the industry that most lenders remain out of date. So what can be done? In order to find out, we've assembled a world-class panel. And before I introduce them, if you're watching on LinkedIn, you'll be able to ask the panel questions if you log into the Zoom broadcast. And if you're going to want to pose a question to our panel, just switch the settings to everyone. But without further ado, let's meet our experts. So may I introduce Suzanne Homewood. Suzanne is Managing Director of Money Hub, which many of you may know as an open banking and payments and data platform. Suzanne, welcome to FinTech Talk.
Hi, nice to meet you. Nice to be here. Thanks for asking me.
Great. Well, we have a great subject. You're coming through loud and clear. We have Stuart Sykes. Stuart is the founder and MD of Midas Advisory Services, a corporate advisory to all lending platforms. Stuart, hi.
Good afternoon, everybody. And thank you for inviting me today.
Cracking. We have Michael Allison. Michael is Commercial Director of Roma Finance, a specialist in bridging and development finance.
Good afternoon, everybody. Looking forward to the discussion today.
Great to see you. And completing the panel is Wesley Brooks. Wesley is Director of Global Business Development at Madiston, a lending platform for financial services. Wesley, great to see you.
Good afternoon, Charles and everyone. Looking forward to this topical conversation.
Great. Well, to kick us off, we were looking at a news item in Open Banking Expo, which talked about the need for lenders to modernize. And it really summed up the need for LendTech on one line, just leapt out at me, which is about the outdated methods of income and employment verification, which have long relied on manual processes. And I confess, my heart fell. People still using manual processes. What a horrible situation. Stuart, can you just sum up for me and us where the lending industry is with technology? Because this is FinTech Talk. We like to think that everyone's obsessed with FinTech, but it's not always the case, is it? I mean, there are plenty of organizations out there that still have out of date and frankly manual processes.
Yeah, that's right, Charles. And I think from my background, it's across all verticals of lending. So I've seen the revolution in unsecured lending over the past sort of 20 years, in where we've got to with opening accounts now, confirmation, verification of spend that we have and income. And I think where I've seen this sort of that shift in that unsecured world is as we all now know today, if you apply for a loan or a bank account, it's quite seamless in most cases, certainly with challenger banks of where they are. But when I look at my days in the property world, it is slower, it is behind the times there. In not all cases, don't get me wrong, there's some really great companies out there that are striving to do these things better. But there's a large amount of them that are still in reverse, shall I say, and they're getting left behind quite quickly. And as the article sort of stated that was flashed up, when we look at open banking and where we are now, and the ability we have to look at my account as I'm applying to verify my accounts are correct, that my spend and income is what I'm saying it is, rather than lots of reams of paper. And in my day we used a fax machine. That's how long ago I've been in this, nearly just coming out of telex. So we then had reams of paper to review and standing by that fax machine on a Friday trying to get that deal over the line. Nowadays, certainly in the property world, with the amount of brokers there are, speed is of the essence, and of course safety. Safe to know that Charles is my customer, what he said is accurate. But taking away that manual process and actually having some technology behind it really will move the curve here and get it more in line with what us as consumers are used to seeing. And property guys and large firms are no different to us as a consumer. If I see something that's very manual and outdated, I'll look for something that's quicker, easier, and faster for me. And of course, brokers are going to do the same thing.
It's a great introduction and overview. Thank you. But Michael, I just want to understand what the goal is here. I have heard some people talk about fully automated banking. I mean, Paul Taylor at Thought Machine, core banking provider, talks about the automated bank. But lending is an interesting niche here, because I'm sure in your line of work, you really talk to people and see the whites of their eyes. So what's going on? What should people be aiming for? Is it full automation and removal of humans at every level? Is that what we're aiming at with Lentech?
No. I think it's all about providing the platform for the human touch to be the intelligent touch. And what Stuart said was really key there. Moving on as a lender and as a business, you've also got to think about the time that's invested internally in using those bank statements and using that ID. I know that when we at Roma Finance, I think it was 2018, we switched to open banking. It really did help. The take-up was so small because the education of customers back in 2018 was so small, but people are becoming more and more used to using open banking and the digital tools for identification outside of lending now. And I think there has been a push for more digital in the lending space. Certainly in bridging, there's always that opportunity. We recognise that digital can mean speed, and speed is what bridging is there to do. But it's not to take away the decision making, because normally it's the decision that adds the value back into the customer journey. It's to enable better, more informed decision. But I think if you read the article, it's that consistency as well. If you look how many near declines were turned around for those customers who needed access to finance, and it was the open banking that enabled that access, that's what it can do. And I think if in an ideal world, everybody would be operating off the same platform and we all have a digital credit profile that's used by every bank, every lender, and all that happens then is the lenders apply their own appetite to it. But we're a long way from that. Well,
you mentioned open banking, and it's a great subject because, again, it was a technology that was slow at first, but is now just gathering incredible momentum. Suzanne, you've been brought in as the heavyweight here on open banking. Can you just tell people what can be done with open banking? People will be familiar with stuff like account aggregators, which was version 1.0 of open banking, but there's just such a diverse set of applications. Just give us an idea how open banking can be used with Lentech.
Yeah, you're absolutely right, and I hope you weren't referring to me as a heavyweight, but more about what we do.
Intellectual heavyweight.
Yeah, you're right. There's loads of use cases for open banking. I've been with MoneyHub for 4 years, and over those 4 years, the number of different areas across financial services, utilities, telcos, charities, all sorts of different areas. As the guys have both said, open banking is about giving people, organizations, access to consented data, customer consented data, so that they can help their customers make better decisions. It's not just about the business, it's also about helping the customer make better decisions. So we look at, in our business, we kind of look at it as the ilities, suitability, affordability, eligibility, and then vulnerability as well. I think, the point of the data is, at whatever point the customer is coming into the journey, they're either applying for a product, or they want to have access to a cheaper social tariff in utilities, or they're in trouble, they're in a debt management environment, and actually they could afford it, but something has happened in their life, they now can't afford it, or they're struggling to pay at the right time, all of those kind of scenarios. So finding that suitability or affordability of a product by looking at the individual's financial current, live and past financial situation. What we can help organizations do is use that data, exactly as Michael said, use that data to make that better decision. As Stuart said, add the human element into and on top of that data. So the process is, and I'm sure we'll talk about this today, the perception of open banking and the perception for a lot of organizations that customers don't want to share their data. Oh yeah, they do. When it's really clear what the use case is, when it's really clear why they're sharing their data, want to get what they're going to get back, we've got just over 96% acceptance rate across all of our open banking providers. Some are at like 98, 99, some are a little bit low, 95, but the average is like 96% plus wanting to share their data when you're really clear with them why they're sharing their data, what they're going to get out of it, and what the outcome potentially is. And the other thing I'm sure we're going to talk about today as well is current methods, as you say, they're manual, and they rely on people already having had some form of credit, whether they paid it back or they didn't, whether they were the perceived good for the money. This turns it on its head and says, well, is the money good for them? Can they actually afford this? So by having access to that data, giving them a link, customer selects their bank that they want the organization to look at, assess affordability, and also use predictions to look at how they've managed their money in the past and how that might be impacted in the future. It's just a great insight and frees up any organization to spend more time with those people who need more help, or automate a process to make that run through much quicker.
I love that. There's so much that could be done.
Sorry, Charles.
If I can just,
sorry, Charles.
yeah, I was just wondering. Okay,
it was a great point that Suzanne was making. I was going to add to her ility piece and sustainability. For me, with open banking, the right ratios in place is a really key part when we're looking at prop tech. And if to Michael's point, bridging loans are quite fast. It's about speed, it's about getting those things done. They don't really last a long time. But when then you're looking at development loans of large amounts, when you've got OB there, you've got the sustainability, you've got the consent in those company accounts. You can see and you can set ratios to say if spend or income is 20% below X or above Y. You can start to early warning those within your CRM in your system, which Wesley will speak more eloquent than me about those things, but you can set those things in play and in store. And if you've got a lot of money out there with a company with, say, some devs and some bridging, and you start to see these ratios hit, these are early warnings that previously, and if you're running very manual processes, you will not see. And you can fall foul quite quickly and not realize. So there's another use case with the ility there that I really like, is that sustainability. You can really see this with your customers as long as your ratios are set at the right levels and you find out before things go wrong.
That's right. And that really tees it up. And we're already starting to explore all the amazing things that can be done. But Wesley, what worries me is that many organizations can't do this because their technology is not up to it. So perhaps you can give us an idea about how easy it is to upgrade in the modern era with amazing platforms and third-party services, and what some of the quick wins are for organizations that are conscious that they're out of date and maybe don't have a huge budget to spend on total organizational transformation. What can people do, Wesley?
Well, there's a variety of options. It's a massive market, the financial technology market and lending tech in particular. But it's all about getting the right balance for your individual company and applying it in a way that would suit your customer base. So depending on whether you're looking at property lending or normal consumer lending, or looking at perhaps large commercial lending, what does your dynamic look like? Who are you aiming at? What you're looking for? The human touch is so important. Being at lots of different seminars, everyone wants to still be in contact with a human, but want the ability to have that automation. Because the heavy lifting of what we talked about of due diligence, knowing your client, knowing your business. When I started in banking, it was all, you had to certify photocopies of 6 months of bank statements, or what assets are you putting up for collateral. You had to meet the person, and I did my stint of doing all of that. So nowadays it's so much more digital, so much easier. So what can they do? They can bring in systems perhaps that can integrate easily and quickly. So platforms that can connect to, as Stuart said, a CRM. It doesn't have to overtake your whole business. It can handle that lending portion. And I think a really important bit is about balancing IT with the human element. Now, that's not just interacting with clients, but it's also internally. Everyone knows that in businesses, people are your most expensive resource. So you want to maximize them, and having them do those sorts of manual situations where you're looking at income and finance, that sort of stuff that IT can do. So let's take advantage of that. Let's speed up that process. Have humans who are dealing with the on the edge stuff. Is this going to tip one way or the other? We need to look at that more. Use that time to look at those situations, and sort of the run of the mill that can be used with technologies and platforms to be more efficient. Take that heavy lifting out of it, so you can free up your staff. So operationally you can be more efficient. Now, with regards to prop tech lending, I heard many a time lenders and brokers, they will say, well, that depends on the speed of the lawyer. If you've got a good lawyer, it can be quite quick. If you've got a bad lawyer, it can be quite slow. So is that there's a way, you know, platforms can handle third-party interactions. So you're looking at a property lending situation, you can have portals where all the different third parties can log on, see the documents that are required. They can all see what is still needed. And a lot of the thing, I think Suzanne talked about the human element in the back office and behind operations, is that chasing. Where's this document? Where's that document? I've talked to many financial institutions that 25% of their time is spent chasing, going back and forth, trying to get things. If I gave your company 25% more time, what would you do with that? Well, you could definitely increase sales or focus on areas that you think you're lacking in. So using automated systems that can interlink with your existing systems via API can help you operationally, particularly in the back office, and means that you can free up those humans to where you want them, so you can have that interaction and still have that human touch balanced with the IT technology.
Yeah, Suzanne.
I was going to say, I think there's other angles as well. I think it helps with consumer duty. You can start now tracking where your fair value, your outcomes are starting to track through, because you've got a data trail of that customer's data. You can prove that you made the best choice with and for your customer. And I think alongside the efficiency of freeing up, because we have customers who saving 40 hours a month, 23% on operational costs. But what that enables organisations that we're starting to see is thinking more strategically about the future of their lending product, about the future of how they can change and adapt and bring new products to market, because they've got time to do it and they've got the data to analyse it. The traditional CRA data, the sources of data that organisations have used, it's out of date by the nature of it. It's out of date. But more importantly, what it doesn't give is a human's behavioural interaction with their finances. And that's what the open banking data can do. So we have an AI tool that enables like an underwriting supporting tool. So you can use your kind of decisions that you've made and look forwards to say, well, how might that change the matrix that we've got for our risk metrics, for instance, or how might we decide to use our levers to bring more people into our product, or what other new products do we need? So there's so many angles to this. It's granular data, which means you can do so much more for your customer, for your business, and for the future of your product.
Yeah, how important is it? Oh, sorry, Michael, go ahead. Yes.
Yeah, sorry, I think it's my turn to jump in now. I think just with regards to what's really interesting, I think it's a mixture of what Suzanne said and Wesley said. Suzanne's very right in that when you're assessing the customer on the open banking, that is all about the finance company, the lender, against their own credit decision policy. That is very much an insular journey. Where Wesley mentioned about we are then reliant on other areas within that ecosystem, be a valuer, a broker, a lawyer, the customer's lawyer, maybe even the estate agent. The customer's actually going through more than one journey at any one time. They're going through 4 or 5 different journeys. And it's that misalignment of the journey at times that can really cause that frustration internally and externally, which can hold you back from the investment, because you can only solve such a small piece of the jigsaw at times. And I think it's worth bearing in mind that in a utopia approach, we'd all be working off a similar approach to the customer journey, but we're over reliant on other parties as well. So there's only so much we can do, which will feel very insular. So for the customer, what real benefit did they get from the open banking? It helps them with the lending decision. It helps it speed it up. It helps with consistency, but it doesn't help them once they get to legal. It doesn't help them once they get to Val. It doesn't help them once they get to ID and V. That's a different journey that they go on again. So it's trying to find that joined up, which is sometimes why it needs quite a lot of bodies in there as opposed to technology.
Well, yeah, Stuart, I can see you nodding away there. I mean, you work with lots of lenders. I mean, how sensitive are they to what Michael's saying about the need for consistency across the customer journey?
Yeah, the consistency is a key element, as Michael was saying, and I think that the points there on the third parties, I 100% agree with. When you're dealing with lots of different hands in the pie, shall we say? But I do caveat that if you've got the right system, where as a lender, your brokers can access your CRM, the lawyers can, you know, a lot of people use VAS for argument's sake, so you're able to, you know, use that automatically anyway. And you know, you've got you know, companies like PlotTech, for argument's sake, if you're doing large bills development that again is CRM based. To Wesley's point, as long as you have an AI and open AI ability, there is no reason why, if I had a lending company today, Sykes Lending, that, you know, the lawyers, the valuers and the estate agents don't just log into that CRM. They have it in front of them. The documents are on there. The customer is then can see all of this because they're logging into their account. Where is this? Where is that? What I've seen so much in the past is so much time towards this point, to say 25%, actually it was up to probably 40%, was chasing from customers and chasing from my staff to lawyers and to X and to Y. And it's often was, it'll be done in a minute or it'll be done in the morning, was actually where you have a CRM that runs and the lender holds that power of the CRM and everybody has access to it. You're taking away a huge amount of time, effort, contacts by having it in that one place. And there's no real other buy-in when you think about it from a you know, if you're a law firm and you're just logging in because you've got access to that system and you're just updating your pieces, it's actually easier for them. They're not having to put everything together, send a separate email, make sure it's gone. Is it too big? Right, I've got to put it on my OneDrive, on my Dropbox. I've got to download it. You've got all of those complexities that come even with just using other digital elements like Dropboxes and OneDrives. So for me, that's where, you know, the industry has to get to that point. And you'll see this in asset finance with some of the big asset lenders in different classes outside of property do this already. And there's some really good examples of those companies that do it. But where we're trying to get to end, it really is on, you know, like Michael was saying, they adopted OB in 2018, brilliant. And then you can start to adopt on top. And to Wesley's point, you don't have to go and spend £1 million on a system. It's not the point. The point is about having a CRM that's open with an AI system so you can add bolts to it as you grow as a business, and your third parties have access to and can bring it in. You then the savings you'd have on overall staffing, and it's not about getting rid of people, don't get me wrong. It's about as you grow, you're not taking more people. Your forward is, I've got 50 now, I'm going to triple the size of the business and still have 50. They'll just be concentrating on niche cases, discussions with people that are a little bit worried. Those are the keys we've got to look at moving forward.
100%. It's upskilling. It gives you the opportunity to upskill your existing workforce, which actually enables a bit of growth for your colleagues as well. I don't think anybody wants to leave school and be a data entry person. You know, well, maybe they do, but certainly we need to give them the tools to be able to progress with their career wherever that may be.
To Stuart's point, sorry, Charles.
Go
just
ahead,
to Stuart's point.
Oh,
okay. To Stuart's point, and actually mentioning someone that has asked a question about, you know, what automation can do. Platforms that have the ability for multiple third parties to provide this information that's required, particularly in property lending, that think about mortgages and development and bridging. It really speeds up the process because including this is all notifications. So someone uploads a document that everyone's waiting for, all the necessary parties can then receive a message saying this has been uploaded or this is still required. This can all be automated. This isn't someone sitting there then sending an email to everyone saying, oh, great, we got this valuation or whatever it might be. The system can handle that. So again, that's all that time saved. So enhancing that process and getting that over the line, you can really see who's pulling their weight in a deal. Because it might just be one of those 4 or 5 parties that Michael mentioned that isn't pulling their weight. So then the focus can be, come on, we need you to do your part so we can get this deal done. Because, you know, these are time critical situations, especially when you're looking at property purchases. These, you know, people want to purchase this property or get this bridge or move that house. And this is constantly happening. So having a platform like that can absorb all of that helps the automation. And also with the change, with just quickly going back to the article that mentioned about transparency and fairness, you know, if people have change of circumstances, which they will do in this difficult financial system that we find ourselves in with the cost of living crisis, having a system that can contact people regarding changes in their income or, you know, loss of job or increasing costs, all that sort of stuff, and can offer variations. Now this, you know, you could have a relationship manager be doing that, or it could be the system. You know, if someone's got a problem, they can log in and say, I'm having difficulty. The system can then provide different options for them, which would suit them the best. So automating that process, but still having those humans that you can interact with. I know we mentioned the other day, NFU Mutual as a company that you can't do anything online. Actually, you have to ring them up and speak to a human, which is very novel, but it seems cyclical because that's how this all started. So people still want a human touch, but where we can automate things is speeding up those processes. And I think what we found in people I've spoke to is when they have financial difficulties, actually someone ringing them up, sending them multiple emails, sort of stressing them out is not a really good way to go. Actually, if they've got the ability to have these different choices where they don't feel under pressure, they're more likely to be able to change the situation, whether it be a payment holiday or change of terms or lengthening of it or whatever it might be. If they've got someone saying, we need your expenditure, we need your income, how many kids live there, what's going on, all this stuff, it feels like they're being interrogated. Whereas actually, if they have a digital relationship, then they can actually provide that in a far more relaxed way, which is going to get a better outcome. So that's fairer for both the business and the client, and it's going to reduce in the possibility of having bad debts or bad lending go out.
Yeah, I agree. It's a great point. I call that it's validation of people spending instead of interrogation. So because you're using the data as a start point, it's not saying, just rely on the data and that's it. You're still going to discuss with that customer their spending. But it gives an opportunity as well for most people don't understand why they get a yes or a no. They apply for a product, particularly in unsecured lending, and the system says no. And it's like, well, why is that? What have I done wrong? And it might be for a bad decision they made 6 months ago. It might be for actually some gambling that they're doing that they've detected. So the opportunity for lenders is also to use that data to educate, help and inform people of what the choices they're making might have a negative impact on their choices in the future, i.e. not being able to get access to funds. So I think there's so much that the data enables organisations and consumers to do and understand. And just building on Wesley's point of that insight giving you the ability to react quicker or react when things change with your customer. So with open banking, you can either have a one-time access to the data, or you can have a 90-day access, or that for your consented journey with the customer. And you need to be really clear with your customer what you're doing if it's one time where you're having the 90-day. But we've seen with our unsecured lenders that the 90-day ongoing access is really, really helpful for them and their customers. They do a check twice a month. One is for the funds before they go out. And then the second one is again to check that affordability. Can this customer still afford to repay this loan? And they've seen over a 3-month period a 37% increase in their successful repayment of the loan, because they've been able to track and help and support people through that period. And then at the end of that 90 days, you either redo another 90 days if your customer's happy with that. So the automation in this process is really quite simple. It is all down to consumer consent, but the value add to both parties is really good.
I think, yeah, that's great, Suzanne. Sorry, Charles, just quickly on that point, but again, back to sustainability. It also allows you, when you're looking at, high drawdowns across, a loan that's going to take a while, it's a largish dev, that we may have all had them. I've certainly seen them in past lives, where all of a sudden the cash gets squandered. You've got subbies saying, where was that money? I've not been paid. You can start to see that. Now, when you've got OB, you can say, well, we've released 500,000 based on the QS report. Where has that now gone? And you're able to see that. Now, it's not a big brother. It's about fraud and risk. And it's about risk to your business as well. And where has the money gone? Have the subbies been paid? Where is that gone? And you get a subbie saying, well, ringing you as the lender saying, we've not been paid for a week, a month, whatever. Well, actually, I can see that entry on there. I can see you have. Now, if it's not there yet, you haven't. Then you've got this legitimate piece to go back to the borrower and say, well, what's going on? That was released on the QS information. Why is these things not being paid? So you've also got that from your sustainability, making sure that the funds are going to where they should be and what that drawdown was intended for.
Yeah. You're enabling a really strong relationship, because we're talking about the instances when it's not going well, which are minimal compared to the instances of when it is. So actually you can reward the appropriate behavior with the next product, or you can see people who know, like, and trust. And I think what's really refreshing is that approach of it's not just about onboarding a customer by using their credit profile, credit data, especially when you think, you know, in the line of work we're in, bridging finance. If their exit is refinance, how they conduct from the point they draw down the funds to the exit is imperative for them to be able to move on to a cheaper, more long-term product. So guiding the customer through that period is key. So I think that's the big change that I'm seeing in with the use of data. It's not just about, are they creditworthy on day one? It's about, are there any warning signs? And not just risks, are there any opportunities with this borrower to do more business, better quality business, maybe even reflect the reduced risk in a better product set? So I think it's using it intelligently, isn't it? Rather than just, you can have a loan, you can't. And I think that's a real big step forward.
And it was when I first was involved in a lot of open banking 6-7 years ago, Open Pay and other companies back in the day when they first came up. I was at conferences and people always joked it was a tool of the middle class, because it was mainly being used at the front end for mortgages. And when people consented for a mortgage, they got a lower rate. There was this, you know, this crumb to say, come here, look, here's your open banking. You can get a lower rate because we know more about you, we know more about your finances, you're a better risk for us or not, however the case may be. And what we saw a lot of, you know, people refinancing their mortgages using OB to get a better rate than those that didn't. And we've moved more away from that, to Susanna's point. It's not just that one thing at the front end now that we use open banking for. But to your point, Michael, I think it's a really great point that the risk guys in the different businesses in PropTech can look at the OB and maybe offer a different price or product or term or whatever it wants to be, because we know more about you. We can see more what's going on about you and your business and how things are working. And I think that's a really key area from a credit. If I've got my credit risk count, that's a really key area to look at. Is it's not just, I'm not just scoring Michael or Susanna based on what's happened in the past. Don't forget CRA data, all that stuff, as we know, is often 3-month delayed anyway. So you always look at, it's got the backward view. OB is here and now and in the present. And as you move forward, you can then plot that correctly with your risk and your scorecards. So there's a lot more data, but you know, it's always that thing that I always err on a side of caution with, is it's not a silver bullet. OB is still, you know, relatively new with regard to how you're going to use it in risk and the way that the merchant codes are categorized. You know, Suzanne, again, you know, can speak more eloquently than I can, but they're not broken down into real, you know, tangible areas. You know, the RMCC still, it will say this is what's going out, this is what's come in, and you can make some assumptions based on those. But, you know, it's how then your risk modeling, your scorecarding picks that up and how you do that internally. A great mix of internal and external for me is always going to be the most important thing to have when you're looking at that particular piece.
You're absolutely right. You know, the categorization in open banking is where it wins or it doesn't. You've got to have the best possible categorization. You've got to have the best insight that you can pull from that data. And I agree. What, you know, if somebody shops at Tesco, you don't know what they're buying. Are they buying alcohol? Are they buying food? You know, you can't see the till receipt. But what you can infer from open banking data is the timing, the value, the repetition of it. So you can start to see the behaviours that you pull into a risk assessment. You know, some of it is obvious. Gambling is very easy to detect. Missed direct debits, transfers in and out, odd behaviours, lots of cash out. You know, there's lots of risk profiles that we pull in for our lending customers. But the real kind of the insight bit is the timing that the customers do this, the regularity, the amount, and obviously the impact on their spending, their income, cash flow, etc. So you're right. It's not going to be the absolute. You know, if you've got edge cases, of course, that's why you have underwriters, and that's their role, is to look at that. But at least you start from a point of insight. You start from a point of understanding, and then you can talk to your customer a bit in more detail. Again, going back to that. Verifying instead of interrogating, or validating instead of interrogating. And the question there on improving the credit risk and the personalisation, the piece I always like to say is the whole point with open banking is it's my data, it's about me. It's not people who look like me. It's not the bias that's applied based on other things that I might have done in the past that's, 3, 6, 9 months out of date. It is me. And therefore you can truly personalize your conversation as well as your products and services to your customers.
Yeah, Suzanne, I'd just like to ask about whether people are actually doing what you say, because you guys are all experts. That's why we've got you on. But it worries me, you're outliers. You're at the cutting edge. And most people, NFU Mutual doing things by phone. I had a dealing with the Post Office Bank, which affiliated with Bank of Ireland. They're incapable of using email. So I wonder what you're saying is wonderful in theory, but what do you actually see? I mean, Suzanne, when you work with organizations, do they need a lot of training in what you're saying, or does everyone get it by about now? Because open banking's been around for a while.
That's a really great question. And I think it depends on the risk and compliance view of the organization, to be honest. I think a lot of people get it now. Again, 4 years ago when I first started, people say, yeah, open banking, it's something to do with financial data, isn't it? I think, in this environment, lending, I think it's a really natural use case because there's a clear customer value. You're applying for something, you're sharing your data, you're going to share your data anyway. This is an automated way to do it. So definitely lending, unsecured lending. I'd say secured lending is a little slower. There's fewer organizations that are really nervous about it. I think they're nervous about it for a couple of reasons. I think that they think that people don't want to share their data, which I find really odd when you ask them to send in 3 or 6 months worth of their bank statements. What's the difference? It's automated. But I think lots of mortgage organizations have a very kind of embedded process in how they review the customer spending. And also the broker journey, of course, is a complication in there because of the opportunities that come in. But I think that's starting to change. I think organizations now are seeing that data is valuable. The automation is valuable. How can they get to it without adding in customer friction? And that's the important bit. Make it easy for your customer, make it easy for you. But yeah, I mean, we've got unsecured lending, we've got income verification for multiple different types of products, all those entities we've talked about, from application of social tariffs, looking at benefits, to even a lawyer who's using it themselves for a debt platform. And we've just done an integration with them. It's really, really interesting how they will use it. But again, they have that data stored for the ongoing ability to manage litigation cases. So it's starting to really spread out with spider web fingers. So it's very exciting.
Can I just follow on? Oh, sorry, go on, Michael.
I was just to close. I think Suzanne picked a really key point there, which is the customer's journey starts normally 1 month, 2 months out from landing with the lender. And so when you then go to try and ask for open banking, and the broker turns around and says, I've already got the 3 months bank statements because I've been through with a fine tooth comb, that's why I'm with you. Here they are. It's that joined up approach, isn't it? And that ability. Here's your certified ID. We send out a link so they can do the selfie against the chip on the passport, because that gives us better returns. But they've already sent us in the ID piece, because a lender, unless it's a direct to customer journey, they're not in control of what happens before it gets there. So that sometimes causes some friction. If we say, that's fine, thanks for packing that up, Mr. and Mrs. Broker, we're now going to send these links out. You've got to confuse customer as well. Sure, Stuart.
Do you think, Michael, sorry, Charles, just wondering from Michael's perspective, do you think that as we get more into this technology, and again, Wesley was talking about CRMs and things like this, if I'm a broker and I've got my iPad and I'm chatting to Michael, my customer, and I've got a few options that are very similar in pricing, but actually one of them, to your point, is, oh, right, Michael, now I'm going to press this button and you're going to get an email with all this stuff on it, and you can have all this done in 20 minutes while we finish our coffee. Do you think those moving forward are going to, those brokers who are on this journey and they're doing those things, going to get more of those, more of those bites, and those organizations, where you've already got open banking, are going to get more deals sorted out because of the brokers want speed. They want to get paid. They want to get that in, get it done, walk away and get their commission. We know that, and that's great. That's what they do. But if it's taking forever because of paperwork backwards and forwards, but then you've got this option where it's all digital. They can do it on their iPad. They can sign in the CRM and get it done. Do you think that's going to start? Those that go first are really going to start to pick up some. Well, I'm just wondering what your thoughts are on that.
I think there's two answers to that question. The first answer is yes. I can imagine that if it all comes back to what's in it for me, and if the broker can evidence that they can get the faster decision making by utilizing those links, then they will do it. And also, the customer expectation will continue to change. So, obviously, Stuart, I think we're from similar backgrounds dealing in the bridge and development finance. The people who are 50, 60 years old who've been on site, they're starting to exit the finance requirements or getting towards the end of it. The new people come in will be expecting a more digital journey.
Yeah.
They will be expecting somebody can punch it into an iPad if that's what you do, and then send it across. And I think what would be more beneficial is if a broker could create that digital profile of a customer using the tools, and we're able to transfer that data and that passport almost into a lender, and then that lender just runs its own credit rules against it. That would be the utopia. But I think the brokers are going to have to change because the customer demand will expect them to change. You go up to somebody who weren't, the internet's been there all their life, and social media's been there all their life, and then ask them to print and download 3 months bank statements. It's an alien concept. They'll be expecting to click on a link and expecting us to know more about them than they do. So I think that's where I see it going, Stuart.
Yeah.
I've got about 2 or 3 minutes to go, and I'd just like to finish really with some practical advice for organisations who think, God, I've heard what you guys are saying. I'd love to be able to do some of the things you're talking about, but maybe our technology is not there yet. I mean, Wesley, when it comes to upgrading, is this a painful and difficult process? I mean, Madison supplies software services to financial organizations. When you talk to organizations, what are we talking? Is it a kind of 3-year grueling turnaround? Or is Lentech in a position now where adoption is fast, there are APIs, it's cloud services? How painful or pain-free is it to upgrade to where we want to be?
I think people think it's going to be really, really painful. But the reality is that it really isn't. And if you work with the right partner, having a collaborative approach, working with people, not saying we'll do this and they're not involved, working with people, and it's holding the whatever financial service it may be, holding their hand through the process, that reassurance, and making them understand that this will simplify their business, make it easier, and on their journey they can define their client's journey, where they want to go, what they're looking to do. And actually, taking a point to the personalization that Suzanne mentioned and that Jonathan asked in the chat, the process can be personalized to each individual company depending on what they want to do. So we're talking about property lending, having that sort of space where multiple third parties can be involved, including brokers. Michael can provide that information, and then everyone who needs to see it can see it in this central hub, gets people on the same page, which means you're all running in the same direction, which can increase efficiencies. But having that migration also from older systems, people are very apprehensive about changing their back offices. Just ask any tier 1 bank. When was the last time you changed your back office? Oh, right, yeah, we're doing billions of pounds worth of trade on black and green screen technology that's older than I am. So they basically, what they do now is they just layer it, and then they'll push it down the line and we'll worry about it then. But actually having platforms that are available now, including ours, little pitch there, having the ability to transfer and migrate from older systems to bring it forward so that you've got that, it's not just the front end, but it's the back office that is really the engine of any financial institution. That has to be solid, working, and reliable so that it can be used constantly, and going forward can be supported by the new technology that comes out. So having that transition, having someone hold your hand and go through it with you, bring you with you on that journey, not just telling you what to do, I think that's crucial. And moving from analog to digital can benefit anyone of any size. So it could seem scary, but actually if you find the right partnership, it can be moved forward very smoothly, and actually can get to a point perhaps within 90 days of being in that place where you're starting to perhaps have sandbox available that you can sort of maybe test with some clients before you move it on to making it live, so that you're reassured everyone knows what they're doing, and you can process smoothly. So it's not scary, and actually the sooner you jump on board, I think the better off you'll be, because otherwise you'll be left behind, and you'll start probably losing business as a result because you're not up to date with this ever-changing world. So it's easy to do, and I'm sure Suzanne will back that up. It can be seamless and easy, and that's what you want. You want to solve pain points that businesses have, and this is a particularly big one for people. But if they get over the line, they'll see they can be more efficient, and it'll be good for the business and the customer.
Okay, thank you. Well, we've reached, I think, the end of the show. And when this began, I had the assumption that Lendtech was primarily focused on automation, but I think we've gone way, way beyond that. Automation is the least interesting aspect of Lendtech. It is, as Michael and Stuart have been saying, about really transforming the customer journey, every aspect of it, even way through to legal. And as Suzanne says, embrace open banking. There is just so much that can be done. You really can understand every single person, not as a category, not as a group of people, but individually. And Wesley, you've given us a terrific overview on how organizations can upgrade. It's just so much easier than it ever was. So we've covered an immense amount of ground. So yeah, Lendtech's a big field. I hope we've done it justice. So from myself, from Suzanne, Stuart, Michael, and Wesley, and everyone here at FinTech Talk, thank you for joining us.
Thank you.